TradingNut episode 74.
You can take, 10 trades a month, 10 winning trades per month, and at your 1%, and you've got 10% there at the end of the month. But it's the runners that you leave to keep going and do those extra 40, 50, sometimes 100 pips. Sometimes you get that golden egg, right? You get that golden egg that just keeps going. It just keeps going, and you're just trailing the stop loss. Continue to trail it, and your runners can do close to 10% per month as well, and that just makes all the difference. That's what I've tended to find.
The market's going to do something. Your job is not to fight it.
The market never, ever runs away. It's always there.
That personal diary of trading will make you a much better trader than...
I could be right about the direction, but wrong about the trade.
Don't focus on the monetary side.
Trying to make too much money on a trade is what I have seen killed every trader.
Your losses offer you some of the greatest insight you can find into your mistakes.
Relax, learn the process.
Candlestick pattern trading is a freaking trap.
Don't be in a rush to become a millionaire.
Let the market tell you what the market wants to tell you.
This podcast is not financial, trading, or investing advice of any kind. What's up, traders? Welcome to another installment of the TradingNut podcast. I'm your host, Cam Hawkins, and today we have Matthew Todd on the show from Todd Capital Group. Now, Matthew's show starts off with quite a bit of storytelling, and then we get into some massive golden nuggets. So guys, please, I think we go through maybe 20 minutes of storytelling before we get there, but we do get there, and we get there strong, big time. So there was one massive takeaway I had from this interview, which has helped me immensely, and it's a wee trick that Matthew talks about, and I had to go through, I went back through the show about 3 or 4 times to try and find it, because it's just hidden in there. It's a gem. It's around certain numbers, okay, certain numbers which will help you with discipline. So what I sort of took away from the whole show is discipline, and I started using this technique, and all of a sudden things really did change for me for the better, and I'm just basically taking less trades, and it's making a huge difference, a huge difference. Now, on the note of discipline, I do want to mention something that a friend of mine told me. Now, he's in the TradingNut chat room, and he said, I don't know how we got onto it, but he said that he was talking about Jacko Willink, who's an ex Navy SEAL who is all about putting good discipline in place in your life and your lifestyle. And one of the tips or techniques that he teaches, and I'm pretty sure it's him or a friend of his mentioned it. I don't know where it came from, but anyway, the tip is, or the technique is, to do 100 press-ups or push-ups for 100 days straight. And it's a test of discipline. So it's not a test of strength, but a test of discipline. So can you do it? Can you be disciplined enough to do it every single day, even if it gets to like midnight or not midnight, let's say before 11 p.m. Have you got enough discipline to get yourself out of bed and do those 100 push-ups before the end of the day? So anyway, I started doing it on day 15 in, and I've managed to do it 15 days in a row. The difficult part is day 3, because I hadn't done press-ups, push-ups, whatever you want to call them, for a long time. So I was in a lot of pain. So guys, this is a little tip, might help you with your discipline alongside what you're about to hear in this fantastic interview with Matthew Todd. We also jumped on the Zoom after the interview and recorded a little video clip, so you can check that out over there on tradingnut.com. Guys, a lot of value in this. Listen to the stories first, and then we get into some golden nuggets like never before. Here we go. Before we get in there, I always keep forgetting this. Do remember to check out the things I have on the site around automation. So, and in fact, I've changed the site around a bit. So you've got automation stuff there, so you can learn to build trading robots in 21 days. You have the Robot Traders Club, where you can basically get my robot builds and use them on your own accounts and see how they perform. Bit of a community there, and you can also jump on and find out some of the top strategies on the show and take the courses that other guests have left, along with some mindset courses as well, and obviously a bunch of funding options on there. So guys, if you haven't checked out the site yet, you've been listening to this for a while, now's the time to go and check it out. There's a whole lot of stuff there that can help support your trading. All right, guys, let's get on with the show. All right, folks, so we've got Matthew Todd here from Todd Capital Group on the show. Welcome, Matthew, all the way from Glasgow.
Thank you very much. Yep, good to be here.
Yeah, so opposite sides of the globe. I don't think I get many guests any further north than you. So that's an achievement in itself. I don't think we've had any traders from Scotland actually on the show. You're the first.
Well, it's good to be the first.
Yes.
It's good to be the first. There's not many of us, to be fair. There's not a lot of traders in Scotland. It's not quite hit us yet. The whole Forex side of things. We're getting there, but there's not a lot to choose from.
And you think it'd sort of be perfect, like, you know, I suppose I've been to Scotland a few times, and it's quite an indoor culture. You know, the weather's not the best. You'd think that more people would be into it, but I suppose they're just, you know, keen to get down the pub instead. Yeah,
I think so. I think a lot of people associate Scotland with terrible weather, beer, pubs. That's probably an accurate assumption. But I think a lot of it is people in Scotland, predominantly Glasgow, I feel are quite judgy. Everybody's so judgmental, and Forex, as I'm sure you know, has a lot of sort of connotations of it being a scam, and people just trying to, you know, make money off you. These people selling signals and all that sort of stuff. So that's sort of what the word around town is in Glasgow and Scotland. I think at the minute, for the majority, people just see it as a scam rather than an opportunity to make money. So anybody who does something a little bit out the box, a little bit different to the rest, is judged quite quickly and quite harshly. So I think that's why a lot of people are maybe too scared to sort of go outside the box a little bit.
Yeah.
Try something new. But for me, I've been doing it for 6 years now, so it's no different.
Well, let's get into that story, your 6-year journey to here. So how did it all start?
Well, I was actually in Australia at the time. I've got family in Perth, and I was just playing like semi-pro football, and I was looking for a way to make more money, to be honest. And I bought a financial magazine from this shop. I actually think I bought it from the airport, and I was reading that and got into the property development side of things, and I messaged a couple of property developers that I knew and just asked them how they got involved, and they said they made a lot of their money in Forex. So at that point, I started looking into Forex, and I came across a Success Resources seminar, which was being held in Oslo at the time, and my dad was actually based in Oslo, so I thought, okay, that's quite ideal. And I went there, and there was I think it was hosted by Robert Kiyosaki, who wrote the book Rich Dad Poor Dad. And I went to this seminar, and there's loads of different entrepreneurs in tons of different fields, and just speaking about their experience, and then of course at the end of it they tried to sell you their course. So there's me, hook, line and sinker for the Forex course. And so I paid my money to then go back to Norway. I think it was a couple of months later to buy this to do this 2-day course, which I now know was obviously not. It was a bit of a scam, because he then tried to upsell another course, but I didn't really kind of give up the sort of hope with it. I kept sort of studying, and then did another free course, which was just online, which then sold a course to go to Vegas, and you pay £5,000 to go to Vegas, and you get to learn for 5 days in Caesar's Palace. So I did that. I actually took a loan out the bank to pay for it, because I didn't have the money, but I was just so keen to learn. So I went to Vegas and did this course, and I was promised this, that, and the next thing at the end of the course, to which came to nothing. And then I still kept trying to find different ways of learning. I found a mentor who's from Israel, fairly big on Instagram, and I learned a lot from him over the course of probably 2 years. And then, that's after that course, I started to really knuckle down and study. I think a lot at the beginning I was too focused on making the money, and not really putting the time into the charts to understand exactly what the market's all about. And it wasn't until I bought this course which would have been the third attempt, I finally decided to sit down and really study and put the time in. And at that point is when I started to see a little bit more the results coming in. And this was after 2-year period, 2.5-year period of jumping from course to course, mentor to mentor, signals, you name it, I've done it. And that was it for me. And I enjoyed the swing style for a little while, and I think it was around about March last year. Believe it or not, I came across Wicks Don't Lie, and he was trading smaller time frames and kind of intraday. So I thought, okay, maybe I can try and implement a little style on that. And I spoke to Wicks Don't Lie a couple of times. Spoke to Uncle Ted as well, who's a really, really good guy. And he gave me some pointers to which I then just started to put into practice. And now I basically just do the day trading. So I think the styles are pretty different from what myself and Wicks Don't Lie do. But in terms of the confidence to be able to trade the smaller time frames, definitely, my kind of eyes were opened by those two guys without a doubt. And that's really been it since last year. And then I think it was September 2019 I started the live streams on YouTube as well, and that's pretty much it now. That's me where I am now. From what was a pretty long process to find something that worked, consistently. And even though I changed styles along the way, I just think like the knowledge just kept sort of building, because I was, I had an overview of the whole market from a swing perspective to then narrow in on the day trading side of things. And I think that made a massive difference to how I perform when I'm day trading versus, someone who's maybe new and just going straight into day trading without having all that background knowledge beforehand.
Yeah, that's really interesting. I don't think I've heard many people talk about the fact that they've gone from a swing to a day trading approach and found that they're able to leverage what they already knew to I suppose give them a better edge on the day trading side. Now, there's a few things I want to touch on here. So first of all, for anyone that's new to the show, Wicks Don't Lie, Uncle Ted, they've both been on the show before, so you can go back a few episodes and catch them. So as mentioned here by Matt. Now, what I find interesting is like a lot of the listeners are in this journey of, getting to the point where you are now, where things have clicked and just stuck in that cycle. And what I want to go back to is like that very first seminar and Forex course that you took in Oslo, just to give people a perspective of like, what did you learn in that, so that they can sort of understand, what was it flawed, or was it the fact that you just didn't apply it?
Do you know what? It was, during the seminar itself, when the gentleman came on stage and, gave his sort of speech and showed a little bit of what it was that he does. It was very basic, but it was more to show the money side of things. So there wasn't really a lot of technicals involved, to what I know now, of course, but it just didn't really seem like that was the kind of basis of his pitch. The basis of his pitch was very much how much money you can make. So it was showing figures, right? It was just showing trades that he'd taken and not how he'd taken them. And that, of course, lures people in to be able to think that, maybe one day they can make that money. And then when I went to do the course, it was just indicators like everywhere, stochastics, Bollinger Bands, MAs everywhere. It just seemed like a real sort of messy chart, and that you needed to have, multiple different, factors ticked off before even being able to take a trade. There was not really much conversation based on price action and structure and what the market actually is, like what Forex really, really is. It was more just, here's some indicators, you apply them here, this is how you do it. When this happens, you buy. When this happens, you sell. It wasn't really kind of in-depth explanations. It just seems like it was just, little criteria, tick lists that we just had to make sure had happened in order to take a trade. That's kind of what it was all about. So I was sort of missold, and then even on the first day of that 2-day course, the same gentleman mentioned if you pay a further £6,000, you can get one-to-ones, and join this, like, I don't know, VIP trader program, where you'll be given like a fund and all this sort of stuff. So again, I'm not the smartest guy in the world, but I was clever enough to notice a pattern, and it just seemed like it was going from sales pitch to sales pitch, really. So at that point, I sort of stopped taking any of the information in. I sort of decided on the first day, to be honest, that, you know what, it doesn't seem genuine. It doesn't seem like real education. It seems like stuff you've genuinely just taken out of a scrapbook and put together in a slideshow, and with no real thought or effort, just to use as a sales tactic to get your next payment. That's what it seemed. That's the vibe I got. So that was kind of what it was like. It wasn't really the best.
So I'm assuming you didn't go back and go, right, I'm going to dive in and try and trade this thing. You just sort of thought,
correct.
You just left it. Okay. What about the Vegas 5-day trip? I mean, was that any different?
Yeah. So that was a pretty wild one, to be honest. So that started as an online course, and each week you'd have a webinar on something new. You'd be in a support group, you'd receive signals and different bits and bobs in there. And then there was always offers going on in terms of like mentorship, one-to-ones, retreats, for example, the Vegas one, which was the biggest one that I think this company had offered. It was all social media based. There was no real kind of like professional website or anything like that. It was all very much driven by social media, and this is when Forex really became sort of like the next big thing. So this was maybe, what age would I have been? Around about 19, 20 at the time. So at least 4 years ago. So Forex was nowhere near as big as it is now. Back then, especially on a social media, scenario. But it was huge. The company was massive. There was a lot of people involved. Again, it was a free online course driven by sign up to this broker, you'll get your free course, but they get their CPA payment. So that's kind of what that was. But the Vegas trip was, I flew from Glasgow down to London, and then met some of the guys that were going as well in London, and then flew to Vegas, where some of us were put up in New York. Some of us were put up in was it MGM? I think it is.
Yeah, MGM.
And then I think the owner and the educators were in Caesar's Palace, and basically it was a 10-day trip, 5 days of which were Monday to Friday, learning to trade, and it was pretty much a babypips.com remake, which is pretty much what a lot of the courses are out there these days. It's just extracts from babypips.com regurgitated in your own words, and that's pretty much it. So that's what that was, and I think that was £5,000, of which I didn't have at the time. But it was the same company. I was planning on moving to Australia again at the time, with my girlfriend again at the time, and so this was around about June, July, and I knew that I had to learn in a very quick space of time because I was going back to Australia. So I actually got a train from Glasgow down to London at London Bridge. I got off at London Bridge, and the Shard is just right there on your left-hand side when you come out of London Bridge Station. So I went down at, I think, 19 or 20 years old with a suit on, £2,000 cash in my pocket. Walked into the Shard to meet them in the office that they had and asked them to teach me. And I said, I need to learn over the next 2 to 3 months. I need to know everything that you know. And took the $2,000 out. And I cringe thinking about it, why I did something like that now. But I was so keen, I was so eager. Yeah. And they basically said no, like you would need to buy like the course or do one of the retreats, and it just so happened that the Vegas thing came up shortly after, and just a month after, I think it was August, around about August 14th, that the Vegas trip was happening, or something like that anyway. So it was only a month later, which I of course then had to go and lift the rest of that. I had to take a loan out to get the rest of that money. to be able to pay for that. I just started a job in car sales, which I couldn't get the holidays off to go to Vegas for 10 days. I hadn't acquired the holidays yet, so I quit. Went to Vegas, promised, to learn everything and get a job. They actually offered a job after it. The company offered a job and a fund to trade after you pay the $5,000 and you learn. So that never really happened after the fact. So I still planned the Australia trip, to which I think it was a year. I was doing a year in Australia with my girlfriend at the time, and I went in November. And from November to around February, maybe, I sold my car, put the money from my car into my trade account, and tripled it in around 4 months. So I'd made around about £26,000 in the space of 3 months, which at the time I broke risk management. I broke every rule in the book. It was like beginner's luck almost. But because
what were you doing to get to that? I mean, tripling in accounts, it's not a bad thing. But I mean, what were you doing? Do you think that was getting you there? Were you using the stuff you'd learned in Vegas, or was it literally just purely
it was
throwing the dice?
It was 50-50. It was part was throwing the dice based on my emotions. I would hold trades and draw down and just let them run. Multiple things. I was just trading support and resistance. There was not really any technical thought behind what I was doing, but it was working, so I didn't stop. I was taking like 10 lots and 20 lots, and it was ridiculous, and I was making a lot of money very, very quickly, and for me I was clever enough to know, right, this is not sustainable. I know that I'm breaking risk. I know that I'm risking a large portion of my account to make this money, and it was it's not advisable, it's not clever, but at the time I was young, naive, eager, money driven, and I wanted to prove myself to this company, and then they saw what I did with this money, and of course they offered me a job. So whilst I'm in Australia, 3 months into my year visa, about to get a contract with the football team that I was trialing with when I was there, I was offered a job by this company, which I decided to take. So I had to fly home. Girlfriend was not happy. Moved down to London and Southampton to work. Worked for around 2 months for this company. Educating, sending trades out. Managing groups, managing students. Didn't get paid for my 2 months work. So the experience was just ridiculous, to be honest. So I ended up quitting, of course, having not been paid. I was paying, I think it was £1,000 a month to stay in an Airbnb down there, whilst not getting paid. So it was just a bit ridiculous. So I was totally conned by that company.
Did you have a break after that? Did you think this is just everything I'm throwing at this is not working?
Do you know what? Not really, to be honest. There was never a moment where I thought, oh, there's upside here. There's genuine upside. It was just constant. Risk, no certainty. There was no real structure in what I was doing with my finances, my job, career. There was genuinely nothing. I had people obviously watching me, sort of judging me, thinking, he's going to fail. I've got my mum and dad on my back saying, son, you can't keep doing this. My mum's very kind of positive and motivational, and she's got all of that law of attraction in her, like that Tony Robbins stuff. Yeah. She's got all of that in her, so that kept me going a little bit. But my dad, who's very much a realist, is just like, son, get a job or go to uni and work your way up and stuff. But I don't know. I just kind of stuck at it. I thought there's too many people now waiting to see me drop the ball or waiting to see me fail that I can't, because I just can't give them that satisfaction. So I just kept going. I just kept going, and then eventually set up Todd Capital Group after I found some consistency in the trading, and that was it from there.
So you met your mentor in through. I'm guessing you met him through Instagram, the Israeli guy, and I mean, you obviously paid for that mentorship, and or did he, give pity to you and give it to you on the house?
Nah.
So what was different between what he was teaching and what everyone else was I suppose selling you as opposed to teaching?
What kind of got me first was the fact that he interviews you before you buy his course. So he needs to make sure that you are at least knowledgeable in Forex to a sort of general level. He says that everybody should go and do babypips.com before buying his course, because it refers to nothing to do with baby pips at all. It's completely different. It's a lot more in-depth, a lot more personal. You can clearly see that he has his own style and his own stamp on how he views and trades the market. And that kind of got me, because, if you can't, he asked us a couple of questions based on, risk management and stuff like that before he's willing to sell you it, just so you know what you're getting yourself in for. You're not just looking to join a course to take trades of other people and make loads of money off the back of someone else. He wants to know that you genuinely want to learn. So that kind of stuck with me, because there's not many mentors or educators out there that are unwilling to take your money unless you can show them that you're committed and that you at least have a little bit of background in it. So that sort of stood out. And then, the course itself was, again, like I say, has his very own twist on it. A lot of videos, a lot of content that he's put the time into making, which it's not like slideshows or anything like that. He's made the videos speaks. It's all pre-recorded, hours and hours of content. So you could see the time that he put into making that course, and also breaking it down to the extent where someone who's fairly new can still understand it. So you could just see the difference an absolute mile off, and again, the difference in prices. It's like a fifth of what I'm paying to go to Vegas and all that sort of stuff. Being sold the dream and being sold the luxury of what trading can do for you and stuff like that. This guy was very real. His Instagram is full of charts, full of just charts, education. There's no pictures of watches or cars or fancy holidays or anything like that. He's not trying to sell you a dream. He's just, showing you raw trading, and that kind of stood out to me. I think that's really important when people are looking to choose a mentor.
And so if you had to, I suppose, as you mentioned, you left there, you decided to put time and effort in. I mean, what did you end up with? What was the style that you've ended up with?
So I sort of developed the swing style from this guy. Like using fibs, key levels, and I also kind of tying it in with a little bit of baby pips as well, because I genuinely feel like the knowledge on there, or the information on there, is enough to give you the knowledge required to trade, just with that little extra help from this mentor. It enabled me to sort of put two and two together. So that was sort of the style I was trading for a while. But for me, my psychology and my emotions are probably the most important part of my trading. I think because I was getting sick of being in trades and being up maybe 50 pips or even 100 pips, that being a swing trade and then being stopped out for break even, because I've had to wait for a criteria. I've had to wait for certain things to happen to execute that trade. And I might have to wait like a couple of days or maybe a week or sometimes 2 weeks, because it's swing trade and the opportunities just don't come around all the time. And whilst I'm waiting for that setup to come, I execute it and I'm in profit. It looks great. And then I get stopped out for break even, and no longer is that criteria there to execute the trade again. So I feel like I was getting stopped out for break even a lot. I wasn't maximizing the profits. I didn't like being in drawdown, but with the swing style, of course, your stop loss is going to be a little bit larger, just naturally. So then I started to switch back into scalping and day trading, which is the first sort of things that I learned in trading, and then stumbled across, as I mentioned, Wicks Don't Lie. And I saw his sort of style, and I thought, how can I implement my swing style in terms of the structure of the market on the lower time frames, because I never used to go lower than the 4-hour chart. And now I execute trades based on like the 30-minute chart or the 15-minute chart. But the structure and the way that I view the market is the exact same way I would view the market on the 4-hour or the daily time frame. I've just tied all of those together and just learned a little bit more on how to read specific candles. That's what I would say has helped me a lot in being able to trade these smaller time frames, is genuinely learning what each candle means and what it means for the following candle after that. So yeah, I'm very much kind of still trading based on structure, which was my swing background, but I'm executing on smaller time frames by reading candles now, and that's what sort of added that different sort of dynamic to my trading.
Cool. And so if we have to break that down, like, so you're trading now, I suppose let's focus on the day trading. What does it look like from, how many trades are you placing in a day?
So I'll tend not to trade any more than 2 to 3 times a day. I try and stick to the 3-trade kind of rule, where you can have 3 wins, you can have 2 wins and a loss, you can have 1 win and 2 losses, or you can have 2 losses. That's it. I try to stick to that, and of course abide by my risk management. So as much as there's a lot of opportunities with day trading and scalping, I just try to stick to no more than 3. I was actually mentioning it to people on stream earlier on about why I don't have targets. People were asking, do you have daily targets, weekly targets, monthly targets? But I personally don't, because Forex is an uncapped industry for earnings. I don't see why we should put a limit on how much we can make, but instead focus on a drawdown limit, focusing on how many trades per day are you taking, how much money are you willing to lose in a day, how much percentage risk of your capital are you willing to lose in a day. And by putting drawdown limits on things, I personally feel that it actually maximizes the gains that you take in the longer term. So limiting your losses is pretty much is what I do, but no more than 3 trades a day for me.
I like that one. I haven't heard that before. It's a great little rule. Something that I might consider thinking about myself. Guys, rewind that, listen to it again if you need to get the detail. So what about risk to reward ratio? I mean, when you're placing a trade, how far away is your reward to your risk?
I tend to go for nothing lower than a 1-to-1. At the moment, my strike rate is probably around 70 to 80%. So I know that with a 1-to-1 risk to reward, I'm still going to have that edge on the market. Even if you're only winning, 6 times out of 10, you can still trade at a 1-to-1 risk to reward, knowing that in the long run, you're going to come out profitable. I'll enter trades if I can see that there's a 1-to-1 available, and of course, close out, 50%, 75% of my position once it hits that target, and then leave part of the position to run, because part of those positions can actually continue moving an extra 30 pips, 50 pips, 100 pips, especially in the market conditions today, which can add again a couple of extra percent to your sort of monthly gains. One of my flatmate actually is someone that I've taught for a long time, and he struggles a lot with leaving runners, which I've been teaching him a lot about recently and showing him how much he can actually be missing out on at the end of every month. And today, finally, he took a trade on EJ that I broke down on stream, which he closed for his 1%, which was his initial risk to reward, and then left a runner to continue, which ended up doing an extra 2.5%. So he's 3.5% for the day, and the runner actually did more than the original trade, and that's what I tend to find makes that difference in your percentage growth at the end of the month. You can take 10 trades a month, 10 winning trades per month, and at your 1%, and you get 10% there at the end of the month. But it's the runners that you leave to keep going and do those extra 40, 50, sometimes 100 pips. Sometimes you get that golden egg, right? You get that golden egg that just keeps going. It just keeps going, and you're just trailing the stop loss. Continue to trail it, and your runners can do close to 10% per month as well, and that just makes all the difference. That's what I tend to find. Anyway, so that's why I always, divide my risk by 2 positions, close one, or part of one, at my original TP to secure that profit. And then the second trade, the second position, which was entered at the same price, I just moved the stop loss to break even and let it run until it hits a percentage that I'm happy with, or maybe hits like a daily target instead of just a 30-minute target. And I found that makes a massive, massive difference in your percentage growth at the end of the month.
I was going to ask how you trail it, but it sounds like you just, so shift your stop to break even and let it go. Because that's what I always find is when I move the stop up and try and lock in some profit, that's when it gets stopped out and then goes for the run. So
I think that, 80% of the time, genuinely, 80% of the time, your runners are going to get stopped out. And to be honest, your runners should get stopped out. They're either going to get stopped out for break even, or if you're trailing that stop, patiently, you could get stopped out for, another 2%, 3%, whatever you set it to is what you get stopped out at. But what I found is that a lot of runners do get stopped out. But see those 2 out of 10 that don't, that is an extra 5% on your portfolio at the end of the month. I guarantee it. I guarantee it. It makes that difference. So a lot of people tend to get a little bit, their morale drops when the runner gets stopped out, right? They think, oh shit, that's just like a losing trade. But in reality, it's not. You've already banked profits, right? You've already won that trade. This runner is just extra, right? If it keeps going, it's a bonus. If it doesn't, big deal. Move on to the next trade. But what I found is that just those 2, even 1 out of 10, right? Even 1 out of 10, you're break even. You've got no risk on the table whatsoever. Let the runner run. If it can go on and do an extra 3%, 4%, you get that twice a month. That's an extra 4, 5, 6, whatever it is. It's an extra at least 5% on your monthly gain. Fact. There's no denying that. And that's what I would advise everybody to do, is just to close out your partial at your first TP, get to break even, and let the rest run.
What about this? What symbols are you looking at? Instruments? How many are you going through?
In terms of what, like my currency pairs?
Currency pairs.
I try not to trade any more than 4. I trade Euro Yen, Pound Yen, Pound CAD, and Euro Australian Dollar. That's the 4 that I trade more than anyone else, pretty much. I used to trade gold a little bit, but with now the spread on gold is massive, so it doesn't really suit my style. I don't like to enter a trade and see the drawdown. When I enter trades, it's normally in areas where there's very little drawdown. That's just my style, trying to get impulsive moves, and I find that I get them quite frequently on pairs like Euro Yen and Pound Yen specifically. But Pound CAD and Euro Aussie move really nicely as well, so I keep an eye on them.
And how did you sort of drill it down to those 4 pairs?
I think what I did is I actually went through my journal from swing trading, and I looked at a lot of the wins that I was taking, and it was on the same pairs. That you'll notice a pattern. It's really important that you journal your trades and then go back over them to see what are the pattern of my losses and what are the patterns of my wins, and then continue to focus on those good points and then alleviate those bad points. So my good points were my swing trades on, for example, Euro Aussie were really, really good, and Pound Yen were also really, really good. So I just started to focus on those pairs on a day trading point of view, and that was it. And it's just like, if it's not broke, don't fix it. So the more pairs that you look at, the more trades you'll be tempted to take. The more trades that you take, the more risk you expose, and the more risk you expose, the more chance of loss. So I just think, keep it small, keep it light, keep it small. That just trade a handful of pairs, even 2 if you're just starting out. I'm a bit more experienced, so I trade 4. But that doesn't mean I trade them all at the same time. I just look to see which one has the best opportunity for that day and stick with it, really. That's pretty much it.
Now, I can't remember if you mentioned, so you said you hadn't gone any lower than 4 hour before. Did you tell us what timeframes you're trading now when you're day trading?
So when I'm analysing the market now for day trading, I'll just use weekly, daily, 4 hour and 30-minute. And in order to analyse, the structure of the market. That's the time frames that I use for that. In regards to like execution, then it's again 30-minute, and sometimes the 15. So once I've done all my analysis, I can just sit on the 30-minute chart for the rest of the day because I know what levels hold relevance and what levels don't, and what I need to see in order to take a trade. So I pretty much execute now based on the 30-minute time frame.
And what does your typical trading day look like?
I'll wake up at around 6 a.m. and I'll jump on the stream for 6:30, and I basically just stream, sit in front of the charts until 10 a.m. If I take trades and I profit, then I'll potentially just decide to not trade New York. If I don't see any trades and it's a quiet day, then, or a quiet London session, then I'll have a break for a couple of hours, go to the gym or do whatever else I need to do work-wise, but just try and take a couple of hours off the charts. I think it's important that I don't sit in front of the charts all the time and be tempted by potential trades that are out with my trading time zones. And then if, as I say, if I don't take anything during London, I'll have a look for New York, and that's pretty much it. And then I don't usually trade after 3 p.m. UK. I tend to be away from the market by that point, and I just kind of close down the charts and do whatever else I need to do for the day. If I go out or if I'm play the Xbox, that's my kind of getaway. And that's pretty much it every single day.
Cool. And look, I mean, sort of thinking back to you, I suppose, becoming a profitable trader, consistently profitable trader. I mean, what do you think? What's the question I'm asking here? I want to ask two questions. One is, what do you think made you different? The other one is like, did you feel that you hit a turning point and you're sort of like, I think I've cracked it? Because it sounds like you were going down the route most of us go down, the large majority for a number of years, and really sort of going down with it with a wrecking ball by the sounds of it.
Yeah.
And then all of a sudden things turned. I mean, what was it that made them turn for you?
To be completely honest, what genuinely changed my trading was unfollowing a lot of the sort of big companies on Instagram, or unfollowing any trader on Instagram for that matter. I think when you're in the learning process, you're constantly seeking validation from other people. You constantly want someone who's more experienced than you to tell you if that trade is good or if it isn't. And regardless of whether that person says yes or no, you're not going to learn anything if it's not based on your own judgment. So for me, a massive learning curve was when I stopped listening to other people's analysis, stopped following other people's trades or advice on my trades. I just decided I'm either going to take this trade or I'm not, and it's going to either win or lose, and either way I'm going to analyze why it won or I'm going to analyze why it lost. And that started to make the difference because I was trusting my own instinct. I was trusting my own analysis, and that for me in the long run really, really helped, because only you can see what you see, right? Only you can see what you can see on a chart. I might see something that suggests a buy, while someone might see something that suggests a sell. One of you guys are going to win, right? One of you guys are going to win. It's not going to benefit anybody. It's not going to benefit yourself if you listen to the other guy. So, I would definitely say as soon as I started trusting my own analysis and not following the advice or the analysis of other traders or seeking validation from anyone else, and just focused purely on, my own, my own knowledge, my own analysis, I did see a bit of a turning point.
Okay, that's a great answer. So what do you recommend for the other guys out there listening that are really struggling with this? What do you think what step should they take to start on the journey to profitability?
Well, I actually would recommend something a little bit different than what a lot of people do, and that's to trade a demo account. A lot of people say that when you start, you need to trade a live account for the whole psychology aspect of it, right? And I think that's fair enough, because if you're losing fake money, it's not going to affect your psychology, right? But I don't think trading at the beginning should be about your psychology. I think it should be very much about practicing the technical aspect of it, that you can do as many times as you want, just to gauge a portfolio of what works and what doesn't. So I would advise anybody at the beginning to start on demo. Don't listen to these people and start on live for your psychology. If you don't know how to play poker, you're not going to walk into a casino with £500 and sit at a poker table, right? It's just not going to happen. You need to be able to practice. So you have to go back and study, practice the technicals, do that on a demo. And that, I would say, is step one. Step two, I would find someone on Instagram who posts pictures of charts. If you're looking for a mentor, that's where a lot of people find. They find you on Instagram. That's pretty much the go-to place now to find a mentor or an educator or whatever it may be. Make sure that person's Instagram isn't full of pictures with cars, watches, fancy holidays. Make sure that it's chart work with explanations, and that you can see that they're genuinely trying to give out value in regards to charts and how the market moves, instead of luring you in with the luxury of what trading can give you. That's what I would say. And then the last one, trust yourself. Don't trust anyone else. Just genuinely trust your own analysis. Go and study. Put in the hours. I used to study when I quit my job. I used to study like 10 hours a day. I put 10 hours a day in front of the charts. That doesn't mean physically trading, but I put 10 hours of chart time in every single day to understand it. And even now I still lose and still make mistakes. But the more time you spend on the chart and the learning process, the better, because you get an overall knowledge of how the market moves. But limit your chart time in the actual trading process. So when you're physically trading, definitely limit it. But that's what I would advise for new people.
Talking about charts, what would you recommend they'd study on a price chart?
Firstly, I would say structure, because that's exactly how I trade. So structure being with the trend, so higher highs and higher lows. Studying that on a daily time frame down to as low as the 30-minute. Looking at correlations to see how they sort of work together and move in the same direction, to have that confluence as to multi-time frame bias. So structure, I would say, is number one. You need to understand what direction is the market in, and that is defined by higher highs, higher lows for an uptrend, lower highs, lower lows for a downtrend. And then what I would work on is support and resistance. I think it's important to understand support and resistance. I know it's very, very basic, but it does help you with entry points and target points. And if you're going to be trading the market, that's two things that you need in order to know when to get in and when to get out. So I would definitely say focus on structure first to understand the direction, and then focus on support and resistance to identify potential turning points and targets. And then after that, I'd say candles. You need to focus on reading candles and understanding what they mean based on their closes, their wicks and stuff like that.
And if you had to sort of describe, I suppose, one candle that was your favourite candle, what would that be?
Now, I don't really use names for candles. I don't think it's easier for me to explain when I'm looking at a chart. But see, for example, an engulfing candle. I want to see a candle. If I'm looking for a reversal or something like that, or resistance being formed, for example, then I want to see a bearish engulfing candle at that area of resistance, preferably breaking the low of the candle prior to it. Because to me that suggests that there's now more selling pressure than buying pressure, and I can then take a sell because resistance has been formed, breaking the low of the previous candle, selling pressure is there. Of course, at that point, structure will be on my side because I've already done that analysis. So that was probably what I would do. Vice versa for buys as well.
Okay, we're going to jump into what I call the technical round, so it's a bunch of quick-fire questions here. Hopefully it's going to give the guys a bit of an insight into what it takes to become a successful trader and summarise some of the stuff you've already spoken about. So the first one is, how long did it take you to go from trading newbie to consistently profitable?
2.5 years.
Thinking about a trader's mindset, do you have any special techniques you can share with us?
Trader's mindset, I would say patience. You need to be patient. Patience pays.
And have you got any sort of hints as to how to be more patient?
Trade less pairs and trade one time session.
What's your favorite entry setup?
Breakout trades. Yeah, breakout with trend. Yeah.
What strategies do you use to exit or manage active trades?
To manage active trades, I would say making sure that they are continuing making higher highs and higher lows in an uptrend and making lower highs and lower lows in a downtrend. If they continue to do that whilst I'm in the trade, I'll continue to hold. As for closing trade, then I'll just look to the left-hand side to see some support and make sure that I grab some partial profit at that price in case of a bounce.
What's your recommended trading book or resource?
I don't really have one for a trading book. I suppose for the psychology side of things, I would say Trading in the Zone. But a book that really sort of kickstarted the whole sort of, I suppose, financial freedom, independence, the entrepreneurial sort of aspect of what I want to do is Rich Dad Poor Dad by Robert Kiyosaki.
Yeah, I think that's everyone's. It was the same for me.
Yeah, it's mad. It's so good. Such a good book.
Another
one.
You go on.
Another one I would genuinely recommend actually that I read towards the end of last year is The Power of Habit. I can't remember the author, but it's called The Power of Habit, and it's just it's really, really good. Read that, and it just helps you understand how habits are formed, how to actually change habits, and what your sort of trigger is. It talks about triggering habits, but it was really good, and you can relate it. It's not trading related, but you can relate it to trading. It's really good.
If there was one thing you'd recommend any retail trader spend the next month mastering, what would it be, why, and how could they go about mastering it?
I would say structure, because it's what moves the market, and if you would like to master it, youtube.com/Todd Capital Group and watch all the videos.
Good. What's your preferred broker and trading platform?
TradingView for analysis and MetaTrader 4 for execution.
What's the worst trade you've ever had?
The worst trade I've ever had is a euro-dollar sell while I was in Australia, breaking risk management. It was £20,000 in profit. I got stopped out for break-even.
Jeez.
Yep.
If you could leave our listeners with one piece of advice, what would it be?
I would say to trust the process of trading. I know it seems very, very difficult at the beginning, and there's so many different aspects to learn. But the potential is there for anybody to be able to make money if you're willing to apply yourself and put in the hours. But it's just important to remember that it's not an overnight success, and it's not a get rich quick. But given you're willing to put as much, more time in than anybody else, it certainly is achievable. And also don't listen to your mates and stuff, because if they tell you that, you can't do it, then, that's, yeah. I just don't listen to any negativity of anybody that says you can't, or anybody that says, you're going to lose money. Look, it's part and parcel of the game. Of course you're going to lose money. The idea is just to limit that.
Cool. Well, look, we're going to jump onto the video here and shoot a little video, and we could chuck it up on the YouTube channel. So before we wrap up here, what's the best way for the traders to get hold of you?
I would say probably Instagram. The tag is @_Todd Capital Group. That's probably the best place to get a hold of us. Or you can just email me at matthew@toddcapitalgroup.co.uk. Yeah, and all the information in regards to the YouTube and stuff like that is there as well. Even on the YouTube, you can see all the information for Instagram and emails and stuff like that. So that's just youtube.com/Todd Capital Group.
Well, look, a big thank you to Matthew today. Everything we've discussed here, along with all the links, are in the show notes. To find them, simply search for Matthew in the search box on TradingNut.com. Until next time, I wish all my listeners trading happiness and success. All right, folks, hope you enjoyed that show with Matthew Todd. Now, do remember to head over to TradingNut.com to check out the video we shot after recording this, where Matthew walks us through a price chart. And I've got to say, it is up there with the best videos I've had in my catalog of dozens and dozens of videos. So, guys, this is really worthwhile checking out. You will learn a thing or two. And if you didn't catch it in the show, what I mentioned at the start, this technique that he used, this rule around the I suppose the 3 trade rule is what he called it. So this is where you can have 3 trades a day, either 3 wins, 1 win, 2 losses, 2 wins, 1 loss, 2 wins, or 2 losses, and you're done. Okay, so basically it gives you enough scope to make some money, but then it stops you from going down a rabbit hole of multiple losers in a single day. So at least you get to sleep on it. Trying to do that with discipline is the key that I found made a big difference for me. So, guys, worthwhile checking out, trying it out. Rewind the show if you need to, but that was big game changer in this show. Now, do remember, there's a whole bunch of other stuff on TradingNut.com as well. I teach you how to build a trading robots in 21 days, and I'm talking about literally everything you can do with a trading robot. There's the Robot Traders Club. There's courses up there that you can have a look from past guests. Massive deals and discounts through with those courses on both strategies and also mindset. And there's a whole lot of funding providers as well that you can choose from if you're looking to get funded. So, guys, until next time, I hope you have a great trading week, and I'll see you in the next episode.